welcome to the week ahead for week 31, 1st to 5th of August 2022. As always, we start with the economic news calendar. I will leave it here for a few seconds so you can take screenshots or take notes in your journal so you know each day where and when to expect volatility injections. Moving on, last week we had the Fed's rate decision where the nominal rate was raised by 75 basis points. So the USD now offers 2.5%. This brings the dollar right at the top in rates among the majors, together with Canada and New Zealand, also at 2.5%. At the other end of the spectrum, of course, we have Japan and Switzerland. In Japan, we had no changes in the past two BOJ meetings. So we updated our table to provide a quick snapshot of current interest rates in the majors after the aggressive hiking we have seen worldwide. Changes in interest rate policies usually bring shifts in market participants' positioning, so we need to monitor these. We now move to US Treasury yields. Yields have been dropping. So now we have the 2 years at 2.8%, 5 years at 2.6, 10 at 2.65, and 30 years at 3. So they dropped since our last weekly analysis last Monday, and this is something that we should take note of because markets are giving mixed signals. On the one hand, we have the nominal rate, which we have just seen in the slides before, where the yield is 2.5%. However, so it's going up. So nominal yields going up, but bonds are in demand so much so that the yields are being pushed down. So treasuries yield moving down while nominal rates are moving up. This is not normal. The two should move together, but they are not. So this is showing an anomaly, a red flag in the financial plumbing system. Somewhere there is a leak, somewhere something is wrong. So what does this mean? Well, we are getting these mixed signals show on one hand the fear expressed in aggressive buying of treasuries, which is not seen in a matching inflow in safe haven currencies like the yen and the Swiss franc. Granted, we have seen a drop in the dollar against the yen and the Swiss franc. However, the dollar is losing ground against all the other majors, so even the euro. So there is no significant jump or inflow in safe havens. So this is another anomaly, another diverging element. So we need to start looking um, where where this is leading. This is a macro approach. This is a slightly different approach to trading, which can be described as find the leak in the plumbing, you will find the mega trade. Okay, so anyways, um, this is just something we take note of, we put in the back of our mind in our journal, and as markets will move and we keep scanning for moves, something sometime at some point will tell us what's happening. Anyways, policymakers are going out of their way to reassure us that all is good. So even if we get 2 quarters of negative GDP growth, there is no recession. So we are redefining the definition of recession. It's no longer two consecutive negative quarters. We have redefined the definition of vaccine. We are redefining the definition of gender. So why not the definition of a recession? So all good. Let's move on to potential trades for the here and now. This week we have some interesting things, and we're going to be talking a little bit about how to use the relative strength chart that we always like to use here. So here we have the daily graph of the majors, the CAD, the Swissy, the Aussie, the Kiwi, the pound, the euro, and the Japanese yen futures. Okay, this is the futures chart. And the relative position on top, the CAD on top, the Swissy second, or at the bottom, the euro and the yen, it doesn't mean anything. The important thing that we're looking for is how price is moving up in each of these markets. For example, if we look at the CAD, we can see that the CAD has been making higher highs. And we move down to the euro, second from the bottom, and we can see that the euro is struggling to make a new high. So right off the bat, from this chart, we gather that the euro among all of these is the weakest. Um, all these futures are priced in this chart against the US dollar. These are futures, so automatically they're priced and they're against the dollar. So we can also monitor the dollar strength in this same graph. Now, the next step, and I would recommend this for you as a study first, and as you zoom into this kind of processes, you would be able to ferret out very interesting trades by looking at the crosses. So, for example, here we see that the Swissy and the CAD are pretty strong, even the yen are pretty strong in this chart. So while the euro is weak, why not pair the weak euro against the yen or the Swissy or the CAD and look at those graphs to see if you can get a nice clean setup that you really like. So this is how you would use the relative strength. Well, we call it relative strength chart. So euro the weakest. Um, Among the other currencies, we are seeing some shy institutional demand in the Canadian dollar. Now, later we will see the charts for the Canadian dollar, and it's messy price action. We don't like it, but for educational purposes, we're going to show our thinking behind these and what do we do with this information. So, moving on. Um, we still have solid demand for the dollar index. So we need to log that in as well because, yes, the dollar is weakening, but the institutional buying is there. And unless the market proves to us otherwise, we still read this dollar weakness as a retracement. So unless the dollar weakens further or stays in a choppy consolidation, the shy institutional demand for the Canadian dollar will not really materialize in a strong, clean rally. What we do like is the correlation between Canadian dollar and oil, because oil is seeing solid buying from institutional market players. But let's look at the technicals because again, the charts, the technical graphs offer a different perspective on this. Moving to the dollar index, this is our daily graph, dollar index, our market barometer. So the dollar continues to weaken even after the FOMC announcement last week. Um, while we do see support coming in at the institutional level at 105 and 105.20 and the big figure 105, we see the potential bullish move that could generate as limited for now. So assuming there are no dramatic news coming out of Europe, where we have quite a few weird things lining up that could be the catalyst for a jump in the dollar. So we need to monitor what is happening in Europe because what do we have there? Well, we got mass protests across Europe in support of the farmers in the Netherlands who are being asked to shut down their business and potentially interrupt the food supply. Um, so we have the gas supply situation across Europe. We have rising inflation, and we have the policymakers that seem totally aloof to the daily living reality, right? And we are reading in the media that people this winter will have to make a choice. Do they switch the heating on, or do they buy food? This is unheard of in Europe. This is since World War II, this is not Europe anymore. So something is happening. Of course, we have the war in Ukraine, supported by different actors. So this list is not complete. It's not the whole list, but unfortunately, it's long enough. So if we were to capitalize on continued dollar weakness, we would express that by choosing among the strongest currencies and or commodities which are in demand. Enter oil. So let's take a look first at the Canadian dollar, which we mentioned earlier. So this is the weekly graph of the US dollar CAD. We drew a Fibonacci channel here to highlight the downward slope of this currency pair, and there is some symmetry in those down up cycles. So if this is your thing, well, you got some meat here to go and discover on your own in your own studies, in your own setup. The weekly chart suggests potential upside for the US CAD. So this goes against the macro information we have, where there is some institutional buying on the Canadian dollar. So maybe it's a summer doldrums, but um, we are not inspired to buy the CAD and short the dollar or short US CAD in this graph. Let's move to the daily to see if we can obtain more details. Here we have the dollar CAD daily. Note the sharp bullish wick down here where the green arrow just showed up that propelled price, and price moved up, breaking prior swing highs. This is bullish for the dollar. Again, we don't see Canadian strength here just yet. So this does not inspire confidence in the strength of the CAD. So we're not going to short here unless we see something meaningful in this graph. Um, let's see what else next. Look at our notes here. So now we move on to other markets. Let's look at oil, crude oil futures. So what exactly should we be looking at in case of dollar weakness? Well, we have some consolidation here. This is a weekly chart. So the price is stuck in that consolidation. We will see it better when we move to the daily later. As traders, we look for clean setups in market, and those generally will set up a decent move one way or the other. We can switch to being bearish this market if the market gives us a clean setup. We can remain bullish in this market if the market gives us the right setup. We don't have that yet. So what do we do with this? Well, if markets do not offer clean opportunities in the higher time frame, namely weekly and daily, then we don't do anything with this market. We either move to lower time frames to scalp, or we move to other markets. With that done, let's move to the daily graphs. So this is the daily oil future graph. On the daily, we have price moving within that range marked in blue, which again does not inspire huge confidence either way for now. No, we don't see a bullish setup here right now, nor do we see a bearish setup materialize for us to take a nice intra-week trade. So when markets are consolidating, what happens? Well, sizable position will start to build on either side of the market, i.e. above the highs and below the lows of this range. The longer the consolidation, the more powerful the move will be later on when it breaks out. So we have strong signs of institutional positioning coming into this market. We need price to confirm this. As mentioned earlier, we will look for a strong and clean setup here. With that, we wish you a great week ahead. Good luck and good trading.